Let's move on to the market and portfolio update for the period from February 16th to February 22nd, 2026. Container mega deal, copper boom, gold under pressure, and Europe is shaky. This week wasn't about inflation. It was a week focused on structure and sectors. Container consolidation, copper drives mining stocks, gold corrects, PayPal under legal pressure, and Europe once again shows structural weakness. Let's take a look at all of this. Hapag-Lloyd is acquiring Zim for $4.2 billion US, $35 US per share, a 58% premium. The closing is expected at the end of 2026. Hapag will become the fifth largest container player worldwide. The significance, massive consolidation, scale effects, stronger bargaining power with customers, and long-term margin stabilization. The current risk rates in the container segment are normalizing. The deal is strategic, not a boom deal. Tankers remain strong. Teekay tankers with $0.25 US dividend, $853 million US in cash, and currently debt-free. Nordic American tankers and Okeanis at 52-week highs, and fourth quarter was very strong. The tanker segment remains a cash flow engine at the moment. Energy is stable but selective. Chevron break-even is very low. 39 years of dividend history starting gas exploration in Greece. This means super majors remain defensively strong building blocks. BP and Shell are trading at 52-week highs. The market prefers integrated players over pure shale companies. BDC liquidity. Blue Owl is selling $1.4 billion US in assets. Sale at 99.7% of face value. Return of capital up to $2.35 US for OBDC2. Debt reduction, no forced liquidation, but liquidity in the credit market remains an issue. CoreWave AI infrastructure is causing short-term nervousness. Mining and precious metals. Newmont's revenue exceeded expectations, profit was below expectations, production for 2026 was lowered, and the stock is currently under pressure. Gold temporarily fell below $4,900 US. Short-term correction, but the long-term bull market remains intact. BHP EBITDA up by 25%, copper is booming, and the dividend was increased, currently at a 52-week high. Copper remains a structural winner, energy transition, AI, and infrastructure. Glencore with a $2 billion US payout. Sale of Kartsing under discussion. Focus on copper deals after talks with Rio. Rio Tinto, strong copper segment, iron ore is a drag, failed talks with Glencore, and mining remains cyclical, copper is outperforming iron. Rates. WP Carey. Price target raised to $72 US, capital increase of $432 million US. Short-term pressure due to dilution, but a long-term growth strategy. Farmland Partners increases the dividend and agricultural exposure remains stable. Tobacco. Philip Morris accelerates transformation, clear financial targets, and smoke-free continues to grow. British American Tobacco, guidance confirmed at the lower end, solid cash flow. Pharma. Novo Nordisk, EU approval, higher dosed Wegovy, massive share buyback program, and the US launch of the pill is off to a strong start. Pricing pressure and competition remain risks. CVS restructuring is showing results. PayPal is currently the risk of the week. Multiple class action lawsuits alleged misleading statements about growth. Institutional investors are selling, sentiment is negative and clearly weak in the short term. Europe, the weakness persists. Volkswagen with a €60 billion savings program, problems with the electric vehicle push in the US, and discussions about plant closures. Stellantis, writing off $96.5 billion, quality issues, and here too, clear rating pressure. Bayer, glyphosate settlement at $7.25 billion, political support through US executive order, and the rating outlook remains negative, with higher volatility at present. What is the major trend right now? Shipping is consolidating, copper is outperforming iron, gold is weak in the short term, super majors remain stable, midstream is delivering, Europe is currently structurally weak, and fintechs are coming under pressure. Capital is currently flowing into cash flow, commodities, and defensive infrastructure. Let's take a quick look at all of this, specifically at the current market cycles. For WTI, we currently have a 3-month increase of 14%, for Brent 16%, for commodities 8%, for gold 23%, and for copper 16%. In the dry bulk sector, it's 97%, and global shipping, that is, sea, is at 14%. In general, for containers, ZIM has seen a 70% increase over 3 months. Otherwise, what can we see? I'll come back to that briefly later. Otherwise, we have a shipping boom, a boom in mining, a transition in energy, and we are currently seeing a recovery in REITs. Otherwise, with the Baltic Dry Index, we currently have a higher probability of special dividends, just as with crude tankers and also with LNG shipping. For containers, it is also elevated at the moment. Exactly, otherwise here in the precious metal cycle, we can also see the same thing here. I've already touched on that briefly above. Exactly, so with REITs and pipelines, we are currently seeing a recovery, hold or buy more accordingly on dips. And now let's take a quick look at sector rotation again, and we can see that capital is currently flowing out of tech, just like in financials and also in the health sector. And it's flowing into REITs, staples, materials, industrials, and energy. Otherwise, what does the complete macro dashboard tell us as an analysis? Here we can see the money supply, which is rising at 4.6% and inflation at 2.31%. Volatility has gone down a bit. Last time it was at 20, now it's at 19%. Otherwise, we currently have a risk-on environment. That means liquidity is available, volatility is low, and the trend is upward, with energy, shipping, and mining currently at an advantage. Exactly, that was basically a rough overview also for this week. As always, this video is of course not investment advice, but just my personal strategy. I wish you continued success with your investments. If you don't want to miss any more portfolio or weekly updates, I'd appreciate it if you subscribed here. Otherwise, if you enjoyed the video or the brief summary, feel free to leave me a like. Feel free to comment on what was most important for you this week or last week, or what you think will happen next week. You can also share what you expect for 2026. 2026 is currently off to a very bumpy start. I'm curious to hear your current assessments, and as always, this is not investment advice. I wish you successful investing and see you in the next video.